If you have 9 to 5 jobs, becoming a trade in your spare time can be quite a challenge. Many people have an interest in the trading but don't want to uh, pursue it as a full-time career or give up their day job to do it. And you don't have to quit your job because many traders only trade part-time for 1 or 2 hours per day. So if you have other time commitments, but you still want to trade part-time, the following strategy can help you to maximize your effort in the last amount of time and record consistent result over the long term. So let's get started. The strategy involves trading price expressions in three waves patterns using only price actions and the Fibonacci 161.8 level. Our aim to trade price actions that take place primarily in the third wave of third wave pattern. A third wave pattern is a simplified Elliot wave cycle. If you are familiar with Elliot wave theory, you probably know that trying to trade it in real time is quite difficult, especially for beginners. The major problem is that you cannot really recognize the Elliott wave until it already plays. So I decided to focus only on the first third wave of the cycle, and let me explain how to do this. Price within all major financial markets tend to move in a fairly predictable manner. Essentially, the market is composed of impulsive price moves and corrective price moves. Elliott waves cycles is a five-wave pattern. There of those waves, 1, 3, and 5 moves in the directions of the underlying trend, while the two waves, 2 and 4, act contracting interruptions or retracement. Well, because Elliott waves are subjective, I decided to focus only in the first third wave. All impulsive waves, corrective price moves, and another impulse moves, which is price movements. We will trade the third wave pattern. I is used as continuations trading setup that is designed to take advantage of the second impulse moves of the market. In any uptrending market, there is patterns of higher highs and higher lows. In other for trend to the upside, the remains active. Each sequence's impulse and wave must take out point B in the formations. When price surpass the price at second swing, you can use this as confirmation to that the third wave pattern is present. This is a chart that explains the conceptions of third wave trading pattern. In an uptrend market situation, price will make 3 points. Point A is the lowest point, which forms a support level. Point B will be the highest point, and from the forms a level what we consider as a potential resistance. Point C will be second low point, support level, which must be higher than point A. The breakout of the price above point B signals the continuations of the uptrend. In a downtrend market, the third wave pattern forms when point A becomes the highest point when price finds resistance and moves down. Point B becomes the lowest point and forms a level that we consider as the potential support. Then price moves up to finds another resistance and point C. When price breaks the point B, support level, it indicates that the market is most likely to continue downwards. The most important variables in this strategy is the swing size, the first AB wave, because our risk to reward ratio will depend on the strength of the first impulse waves. Swing size that is too small can reduce profit targets to such narrow margins that it becomes difficult to exclude them. If the swing size is too big, it could take weeks or even months to reach the target price. The trading strategy requires the following steps: defining the minimum swing size, meaning the first wave of the third wave pattern, applying the Fibonacci tool with small twists to find the 1.618 ratio, taking a trade at the 50% Fibonacci level. Now, strategy. Stay with me for the next part because it's important. In order to find the 1.618 ratio, you could use FIB extensions, but I like to do it another way. The correct way to apply FIB retracements is from a sweet low to the sweet high in an uptrend from point A to point B, and forms the swing high to the swing low in the downtrend. Define the 6 to 1 8 ratio. I add the FIB retracement point B to point A, so other way around. I know it might seem weird or incorrect, but here's the main conditions in order to find the best signals. First, a trend line breakout. A trend line acts as a support for the price when applied to consecutive higher lows in an uptrend, and as a resistance when applied to consecutive lower highs in a downtrend. Once a rising trend is broken, that trend line becomes resistance for the price. Similarly, once a failing trend line is broken, that trend line becomes a support for the price. Basically, the first wave, AB wave, must be the wave that breaks the trend line, like this example. If this sounds complicated, don't worry, we will have plenty of examples later. Second, point C must be higher point A for an up move and lower than point A for a down move. When AB wave ends, it will with the price move lower than BC wave. That will retrace a point of the wave one move. However, the second wave must not fall below the start of wave 1. This is an extremely important rule. The second wave must retrace to the 38.2 FIB level at most. If it retraces to 23.6 FIB level, I personally ignore the setup. The buy or sell zone, depending on the setup, is area between 38.2 and 50 FIB level. Third, if price fails to retrace to a 50% FIB level, ignore the setup. In some cases, the trend line will be broken, but price actions won't make a decent retracement. Sometimes it will retrace to the 61.8 level and then resume its move. For this setup, we want price to trace the 50% level. If it doesn't, we will find other opportunities. So, trend line breakout, find AB level, applying FIB retracement from point B to point A, and try to take a trade at around 50% FIB level, targeting the 1.618 ratio. It's easy and most important price actions based. Here we have the setup on the pound dollars on the 4-hour time frames. We have a clear trend line breakout. Point A is the lowest point in the chart, starting the AB wave. Also, AB wave breaks the trend line. Point B indicates a possible bullish trend. Possible because we don't know yet. The price may retrace in the opposite directions, so we apply FIB retracements. Remember, the other way around from point B to point A. Point C indicates the pullback in this case to the 38.2 level, which is valid conditions if price stalls and rejects the level. You could switch to lower time frames to time your entry. My preference is to enter the trade at the 50% FIB level with a stop loss below the 23.6 level and targeting the 1.618 ratio. If price starts moving upwards, then breakout of the price at point B would add fuel to our positions. Most traders would enter right here at the breakout of point B, but we have a better, smarter entry. At the moment of breakout, we would be already in profit. When price breaks point B, you could move your stop to break even. Even I personally do it every time. Sometimes the price retraces to the entry point, leaving us with break-even trade, and sometimes goes right to our target. In this example, the price continued its upwards directions and retracement to the 1.618 ratio. Here we have euro dollar on the daily time frame. We have the trend line breakouts. Point A is the highest point in the chart, starting AB wave, and this wave breaks the trend line. Point B indicates a possible bearish trend. Then we apply FIB retracements from point B to point A. Price retracements to the 38.2 FIB level, forming a pin bar. Reversal pattern. We enter the trend at the 50% FIB level with a stop loss above the 23.6 level and trading the 1.618 ratio. After a breakout of the price point B, price comes back to reset the level, which then becomes the strong resistance area. When price breaks point B, we move our stop to break even, and the price continuation is downward directions and reached the 1.618 ratio. And look how powerful that level was. As price reached the level, it immediately bounced back. Another long positions, this time a continuation trade. Here's the trend line breakout with AB wave as the first impulse move. Price retracements more than 50%. Remember, almost reaching the 38.2 level. We enter at the 50% level with a stop loss below this area and targeting the 1.618 ratio. Observe once again that after price broke the B point, that level became a support area. Price retests the levels, new target trades enter the market and move the price to our final target at the 1.618 ratio. The reward to risk ratio is maybe the most important metric is the target strategy. By the entering at the 50% level and targeting the 1.618 levels, you get at least 3 to 1 risk reward ratio at minimum, in most cases over 4 to 1 risk to reward ratio. Remember the rules we discussed before. If the price retraced all the way to the 23.6 level, ignore the setups and if the price doesn't reach the 50% level, again look elsewhere. We need those conditions for the highest probability setups. In this example, price retraced and even closed above the 38.2 level, to which invalid the setup, and the price did retrace most likely because of the initial trend line breakout. Another important conditions, and even if the price managed to close below the point B, it failed to reach our final target. You could try to trade this scenario and squeeze some points, maybe to the 100% levels. The best part of this strategy is that you only have to spend 30 to 60 minutes each day, which makes it perfect if you have a busy program and you don't have time to trade. Make sure you analyze the daily, 4-hour and 1-hour time frame, and avoid narrow range markets with too much or not enough volatility and another bad conditions. And yes, you could also use the strategy for the daily trading on the lower time frames. Here are one of examples of the valid trades. As always, if you learned something new and found value, leave us a like to show your support, and don't forget to subscribe and hit the bell icon to get notified every time we release new video. Until next time.